What is up, everyone? Today we're going to talk about chop and a choppy market. Today, CPI was released at 8:30 a.m. and this is the chart from today, August 12th to Wednesday, 8:30. And I got here from about 8:30 to about 9:47. We're just going to go over this area of chop, okay? I was able to recognize the chop and we got out plus 45 and we locked ourselves out, which I'm proud of. But really, what is chop, okay? What is chop? A choppy market is basically a market where neither the buyers nor the sellers are clearly in control. And now we're going to look at the market and see what happened after the CPI came out. Before CPI, as you can see here, the candles are relatively controlled. Then CPI comes out and we have this long volume candle down, and then we have a lot of chop for the next hour. This is also called volatility. And I want you to understand this because volatility and trend are not the same thing. A market can be extremely volatile without having a clean direction. And that's exactly what can trap you because big candles make you feel like, man, I need to get in. I don't want to miss this. Look how much it's moving. But if you're chasing these candles, price can reverse on you almost immediately. So don't confuse the market is moving with the market is giving me a good trade because those two things are completely different. Okay, so for chop, what do we identify? Number one, overlapping candles. The first thing I look for when identifying chop is overlapping candles. We've got green, red, green, red, green, red. We've got green, red, green, red, green, red, green, red, green, green, red, green, red, green, red. Okay? And look at where they're trading. A lot of these candles are overlapping the price range of the candles before them. It's all in the same area. We're not consistently expanding in one direction. Price keeps revisiting the same areas over and over. Compare that with the strong trend. When the market is really trending, you'll usually see price making progress. It'll push, pull back, continuation, push, pull back, continuation. Here we're getting push, reverse, push, reverse, push, reverse. There's no clear follow through. That is one of the first things that tell me, be careful, this market might be choppy. Let's look at number two. I look at the 9 and 20. I look at my 9 and 21 EMAs, okay? The 9 in the green and the 21 in the purple. During a clean trend, I want these averages help me understand direction. For example, in a strong move upward, I generally want the faster 9 EMA above the 21 EMA with some separation, ideally both moving upwards. In a strong move down, the opposite, 9 below the 21 and some separation. But look, today, look at the EMAs, okay? Look at the green and purple EMAs. What's happening? They're crossing. They cross over here, 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 they cross over here. They're continuously crossing. Candles are trading above them, then below them, then above them, then below them. The market can't make up its mind. When my 9 and EMA start looking like braided hair that's braided together, I'm immediately more cautious and I take a step back, which is what we did today. Sign number three, failed breakouts. Now look at this. Price pushes high and you think, okay, it might break out, and then it pushes down. Okay, so you see the support levels here and the resistance levels are all the same. So as you think it's going to break the resistance level, it doesn't. It just bounces off and it hits the support level. It bounces off, hits the resistance level, hits the support level. Okay. There's This is why choppy markets can destroy traders who chase candles because every little move starts looking like the move. So you buy the breakout and then it reverses. You stop out, then you see it dropping and think, okay, now we're going down. You short, it reverses again, stop out, then you go long again. This is why so many people that I've seen on YouTube and Instagram blew their accounts today because they're trading chop, and indirectly chop can lead you directly into overtrading. Okay. Now, another thing I look for is the Bollinger Bands, okay, which I also have on my chart. You see these? That's the top Bollinger Band. This one right here is the middle Bollinger Band, and the orange one is the middle Bollinger Band. We can even use these to visualize what's happening. Look at price moving towards one side, then getting pushed back, moving towards the other side, then getting pushed back again. And we keep coming back towards the middle of the range. Compare that with a really strong trend where price can continue pressing one side of the band when the whole structure moves in that direction. We're not getting that clean behavior here. It's just hugging this one, the top one, and then going back to the bottom one, hugging the top one, and it's a very tight gap. Okay? Bollinger Bands say chop, therefore don't trade. Um, What else? Another thing is chop is dangerous because psychologically it can mess you up. Chop doesn't just attack your account, it attacks your psychology because you're constantly seeing moves that look like opportunities. You get stopped out, then price moves the other direction. So you think, damn, I was just wrong on direction. So you flip it, then that trade doesn't work. Now you're frustrated, now you oversize, now you're trying to get it back. And next thing you know, you're not even trading looking at your chart, you're just gambling and you're trading with emotions. That's why recognizing the environment you're trading in is just as important as recognizing an entry. I recognized this after 5 trades today and actually stopped plus 45. Okay. And sometimes your edge is not even in trading. Okay. And that's probably my biggest lesson today. You don't have to trade every candle. You don't have to trade just because the market is moving. There are going to be days where your setup looks beautiful, and there's going to be days where your direction is obvious. And there are going to be days like this when the chart is basically telling you, I don't know where I'm going. I don't know what I'm doing. And if the market doesn't know where it's going, then how can you pretend like you know where it's going? Sometimes the highest quality decision you can make is to wait. And if it never cleans up, hey, just don't trade because tomorrow is another trading day. Okay, so what do we look for? We look for overlapping candles. We look at 2 tangled EMAs. We look for failed continuation and breakouts. We look for messy market structure. And we look at the Bollinger Bands. Whew! So, if there's one thing I want you to take from this, just take movement does not equal opportunity. Today was CPI, we had volatility, and we have plenty of movement, but there was no clear direction. And if you didn't recognize this and continued trading and you did good, well, good for you. If you blew your account, you should have stopped trading. Learning to recognize when the market is chopping is very important. And in the future, if you see the chop happening, I would just suggest take a day off. And if this helped you understand chop, please leave a comment, like my video, and subscribe, and let me know how you did today with CPI. Love you guys. Bye.